Welcome back. Hope you're all doing well, Bullseye community. I'm sure you're all happy today. The crypto bubbles are telling us that, but is it going to stay? This is what we're going to talk about today. We've got lots of narratives to talk about, and that's going to be key to this episode because markets correlate along with each other. There's lots of indicators showing a short-term bounce for the next couple of months, and we're going to talk about that. Is it a good time to start accumulating your portfolio? Is it a good time to start dipping your toe in the water? We'll be looking at the NASDAQ. Why is that important? We'll be looking at the S&P 500. Why is that important? We'll be looking at the DXY. We'll be looking at fiat currencies. Why is that important? Stay tuned right to the end, guys. It's going to be jam-packed, and I'm going to tell you exactly why. So let's get straight into it. Right, okay, like I say, guys, correlation's the key, and that's what we're going to be focusing on. We're going to start with the DXY, the dollar index, and you can see that this thing is just absolutely ripped. What is this telling us? It's telling us that the world's fearful. Everyone's going into the most stable asset, the dollar, as far as fiat currency is concerned. So there's one indicator that's showing us that that's what we need to identify when there's a change, a pullback in the dollar. When the world's getting a little bit more confident, the markets can turn around and rally. So first of all, I'll just go on the weekly chart, and you can see last time the dollar was at this level was going back to 27th of May 2002. So the dollar hasn't been at this level for 20 years now. And we can see on the weekly, we've had that lower low, lower close, which is indicating a little bit of weakness in the dollar. So we'll get back to the daily chart. And this is the main trend that we need to hold. So stick a quick trend line on there, and it's still holding trend. It's still making higher highs. It's still making higher lows in the market. It's still in trend. But one thing that we can do to identify a little bit of weakness in the market here is you can see that we've had a double top. So we've had a failed double top initially here. Didn't quite come up in touch, but then we had a confirmed double top. And this is on the daily time frame. And we had a confirmed double top here. You've had a double top, you've had a lower low, lower close candle. This engulfed the previous candle and closed below that, showing weakness in the market. So what's likely to happen now, or what we want to happen, is for it to come back up now. It's not going to make a new high. And then you'll start seeing a trend to the downside, come back, retest this. That'll act as resistance and back down to support again. So you can see that that'll create its own little trend. And this time period here is going until 29th of November, start of December. So it will take some time to get down here. If it does happen, there's the first indicator. We'll look at Bitcoin next. Bitcoin's broke its major trend, tick, retest, tick. It's held as support so far. You might actually get a double top here, a pullback, and we want to see this acting as confirmation again before we can get a run to the upside. So Bitcoin ultimately has broke this longer term trend going back, or trends going back since November, formed this triangle, formed this wedge, and there was a higher probability in this wedge that we were going to move to the downside. However, we were at a strong level of support on Bitcoin. We did manage to get the break. We evaluate it again. We've held support, we've bounced support, and we've made a new high. So we'll see what happens at the end of the day on Bitcoin. But that's the second thing that we were looking at. Stochastic showing a little bit oversold on the higher time frame daily. On the weekly, oversold, but we've had a recent cross on the weekly, which is showing that there's a possibility that we're just going to come back into the oversold region, and then before we make a move back down to the downside. But that could take a couple of weeks to happen and a couple of weeks of gain. So that's what the stochastic showing on the indicator. The RSI is still at an oversold level, so it's underneath the 50 range, which is positive for Bitcoin. So we've looked at the DXY. We expected weakness from the dollar. We got weakness from the dollar. We got strength in Bitcoin as a result of weakness from the dollar. And you can see how the markets are correlating here. Next thing is, what do we expect from USDT dominance? So we've had weakness in the DXY, strength in Bitcoin. What's that telling us? USDT should be bleeding. And what does that mean if USDT is bleeding? That means that people are selling their USDT, which is the US dollar tether, backed 1-to-1 against the dollar, and buying cryptocurrency. So you can see how this is correlating as well. Downside, similar to the DXY, this is probably what's going to happen. And you can see Bitcoin up, Bitcoin up, USDT down. So that's the three major indicators that we're looking at, and we're just doing a market health check initially. Next, we're going to have a look at the S&P 500. We're going to look at the NASDAQ, and we're going to look at why that's relevant and how that correlates with the rest of the market. We're going to have a quick look at some fiat currencies, and we all know what you guys are in for. We've got some altcoin picks right at the end as well. The reason why I'm going through this is a market health check, and just to give us a higher probability as what the market's going to do, give us warning signs as to what could happen if the market went wrong and how we can get out of that. So we'll have a look at the S&P 500 next. Right, okay, S&P 500, this one's been bleeding for the whole of 2022, seeing its highs at the December 2021, and we've just had downside moves since then. It's held our major support level. We said we couldn't break this support level, otherwise we'd see a huge move to the downside, and it's reacted quite nicely. We've got this capitulation wick here showing that there was a bit of a change in sentiment and we could get moves to the upside. So what's this telling us? How does this correlate? It's telling us that there's a bit of a negativity in the dollar, a bit of a positive reaction in the rest of the markets. People are coming out of the market, going into stocks, similar to Bitcoin. So this happened on the 13th of October. Go back to Bitcoin on the 13th of October. You can see we had this capitulation and the bulls bought up. We bought up at this level. You can see we were closing in on this wedge and sentiment was changing, and ultimately we got the breakout. So a little bit lagging. Bitcoin was a little bit lagging. It was watching what the stock market was doing. It was watching what the S&P was doing. S&P started creating new higher lows, new higher highs, and we got this huge bullish engulfing candle creating a new local high here on the S&P 500. So let's see if Bitcoin follows that. And just to let you know, the next major level of resistance on Bitcoin, you're going to get the top of this range here as one level of resistance, which is 24,437. But the next major swing low is 26,617. So what you tend to do when you're looking for targets on here is go from the previous swing high to swing low of the move and create a range. So the range on Bitcoin, 26,728 to our next weekly major resistance level, which is 32,316. So you can see that that's a little bit of a leading indicator as far as the crypto market's concerned, as far as Bitcoin's concerned, and you can see so far how these are correlating. So NASDAQ similar to the S&P. NASDAQ, if it did fall down below this level of support here, would have created a big head and shoulders pattern, and a move to the downside would have been nasty there in the NASDAQ. So that held. It's got a good reaction, similar to the S&P 500. It does correlate well. One difference here, we've had the big bullish engulfing candle. It completely wiped out the bears from the previous day, but we haven't quite created that new high yet. So there's a possibility of a bit of a head and shoulders pattern playing out here. Got your neckline here. There's your head, your right shoulder. And if that does play out, what you'd expect to see is a move to 12,752. So that's a possibility. If we do break the neckline on that, the NASDAQ should have quite a nice run. So that's that. We'll have a look at some fiat currencies next and see how they're performing against the dollar. And you can see we had the nasty news in the pound. We had Liz Truss that resigned. That was positive for the market, and we've started creating higher lows, and we've just put in a new higher high. So positivity in the pound against the dollar. That's showing a little bit of weakness in the dollar. How's the euro getting on? Again, the euro's had a bit of a bounce. This is the daily chart, and the euro started creating shorter term higher lows, and it's created a new high again. So short term strength from the euro against the dollar. How's the yen performing? Not as strong, but we still have created a few green candles here showing a little bit of momentum from the yen. Started creating a series of higher lows, and there's there's a little bit of a sell wall here on the yen, so it's not as strong as what the pound and what the dollar's doing, but still it's having a go. So you can see that standard currencies are performing a little bit better short term on the daily against the dollar. And that's just showing one thing, it's showing there's less fear in the market and the market's going to have a chance for Q4 of 2022. So that's the market health check over. Let's get into what you guys are here for. Let's get into the altcoins. Right. Okay. So we've systematically gone through the markets. We've found correlations. We've identified what areas that we need to hold, what we need to identify to tell us that there's going to be a move in the crypto market, in standard markets. We've looked at fiat currencies and we've identified that there's a good possibility now, or a good probability, that the market's going to have a good positive Q4 overall. So we've gone through the approach. We've gone through it for a reason. And all we're doing is giving ourselves probabilities as to whether we're right or whether we're wrong in the market. Remember, it's a market of emotions. We go through lots of indications as to whether we're fearful, whether we're greedy, whether there's anxiety, whether there's panic. And that's one thing that we need now, is a narrative. And if we look on Twitter, you can go and follow Tech Dev if you don't follow Tech Dev already. He's put this chart up, which is the Newport chart, or the net unrealized profit and loss. And you can see here that this follows the Wall Street cheat sheet, and it goes through the same kind of emotional cycles: capitulation, hope, fear, optimism, anxiety, belief, denial, euphoria, and greed. And you can see we're in an area of constant fear now. We've in fact hit fear, had a move into hope, and we've come back and we're fearful again and create a kind of a double bottom pattern. So this is indicating that we've got a positive move to come in Q3 of 2022 if it follows suit of what it previously did in the previous cycles in the previous years. So high upside risk, he's saying, on the Newport. And what is it that we could use for a narrative? There's nothing bigger than Google. So Google introduces cloud-based blockchain node service for Ethereum. And this is on CoinDesk. So I'll just read the top bit for you. And it's saying tech giant Google said Thursday it's going to be launching a cloud-based node engine for Ethereum projects. The company said its Google Cloud blockchain node engine will be fully managed node hosting service that can minimize the need for node operations, meaning that Google will be responsible for monitoring node activity and restarting them during outages. So what does this mean, guys? Well, it's certainly a positive move for the crypto market, and Google's announcement signifies the growing attention that technology giants are giving towards blockchain, crypto, and Web3 projects. Blockchain is changing the way of the world, stores and motivates its information, Google has said in its announcement. So that's your narrative for you. Possible getting some good news going forward. So let's have a look at some altcoins now. Right, okay, first altcoin that I wanted to show you guys is Ethereum, and you see that Ethereum overall is making a series of lower lows and lower highs. So Ethereum's in a downtrend overall. Can we see anything from this move? Looking at it like that, you can't really see too much, but overall we've had this trend going back from December 2021. And people with these diagonal trend lines draw them differently, and that's why they don't hold as well. But as far as Ethereum's concerned, you can draw it this way, or you can draw it that way. Either way, you've had the break, and that's following the positive news from Google. So I'm interested in Ethereum. And two more positives from Ethereum is that we've had a couple of important breaks here. You see, we're trading in a range here, and you've had positive news from Ethereum with a positive 2.0 merge from proof of works to proof of stake. But this level here, which was previous accumulation, is now held as support in this level here. So you can draw your zone again here. And what does this do? It gives us a level to tell us a confirmation as to whether we're wrong in this move. This needs to hold as support going forward. If we break below 1,190, there's a high likeliness that we're coming straight back into trend. This is a fake out, and there's going to be a continuation to the downside, or at a bare minimum, test the previous swing low here. So we know what we're looking for in Ethereum. What we'd like to see is a couple of things could happen. You're going to get the break, come back, get a retest of this area here, which would be a good area confirmation. You can get a confirmation from a double bottom, higher high, higher close. Depends on what you're looking at. But this zone here is the zone that I don't want to break below going forward with Ethereum. So if we hold this level, you can see it moves to the upside, and the previous target that you're looking for here, if we do manage to break out on Ethereum, is top of this range here, 2,112. And from where we are now, that's gains of 24%, but we're not looking from where we are now. Remember, we want the retest. So if we get the retest and confirmation that this is going to act as support, that's turning into 46, 47% gains. So this is important. And basically, if you're buying at the top here, if you're buying when people are pumping, when the indicators are overbought, what you're doing is you're reducing your risk to reward, and there's a higher probability that you're not going to make as much. And if you're wrong, you're going to lose a lot more. So you got to take that into consideration. Be greedy with your entries, wait for a retest, make sure that this is a good confirmation level. If we just check the stochastics, you can see at the moment it's overbought. So what we want is the indicators to come down, this to pull back into the oversold territory. And if we hold this level, we can make a move to the upside with targets, like I say, 2012. So that's Ethereum. We'll have a look at Render next. Right, look at this thing. Look at Render. Render, previous highs during the bull run, going back $7.97. This is the daily on the Binance chart. So you see that these things are risky. You've got to take in consideration these things are risky, and that's why we go through the market indicators to find out what stage we are in the market. These things are not long-term holds for me. These things are offloading at resistance levels, because ultimately, like before, you can see from where we are now to the previous resistance, that's 113% gains on Render. So with these, I only diversify a small amount of my portfolio. And remember, it's just something that I'm doing. None of this is financial advice. So take that into consideration. But with Render, and we were previously saying this on the channel, the bottom of this range here is a good place to accumulate and prepare for something like this to happen. Back to the downside, stock up there. If this acts as resistance going forward, then you just leave it, wait till you go. If we go further to the downside, you can stock up there. So don't have all of your position in at once. Don't have all your eggs in one basket, because the bear market's there to rinse you. You need to make sure that when there's a black swan event or a capitulation event, that you've got enough dry powder to be able to take advantage of that and bring your average down overall. So Render, we know that it was trading a lot higher than what it is now. It's trading at 54 cents now. But it is getting a bit of momentum. You see it's been forming a little bit of a triangle or a wedge pattern here. And this gives us an indication as to where the likely move is next. So we've had the breakout. Not huge volume. You see, we've got what we want to see is one of these volume spikes here. So we've got not huge volume. We haven't managed to create a higher close from this candle. So what I want to see is ultimately a strong move to the upside, close above here, volume in the market, pullback, confirmation, retest, and away we go. So the targets on this, there's two targets on here. There's target one, which would be top of this move here, $1.10, and target two, $1.22. When you look at it in perspective, remember this is the daily. The previous major swing low on this is 177. Whether the market's going to hold up for that long, whether we're going to get a pump that big, I'm just looking for the conservative moves, because the conservative moves from a retest from here, like I say, you're looking at 120% gains from there. So none of this is financial advice, guys. But remember that when you're building a position over a period of time, you shouldn't be putting your own money in. You should be offloading at higher levels. All of it, some of it, whatever, whether you believe in the coin, whether you're just using it to build up on Bitcoin, build up on dollars. Make sure you've got enough dry powder for capitulation. Just remember, don't put all your position in at once. Diversify your portfolio. High risk tokens, only a small percentage of that portfolio, and make sure you apply the appropriate risk management. So that's Render. That's what I'm looking for on Render. Not looking for the buy right now. I want to see a higher high, higher close. I want to see a high above 60 cents. And then that'll act as confirmation, a retest, and of course, a little bit of volume wouldn't go amiss. So that's what I'm looking for in render. And the last one is Theta. So we'll have a look at that now. Right, okay, before we get into Theta, if any of you guys are new to crypto and you're looking to learn chart patterns, you're looking to learn how the markets work, if you're a beginner, we've got an Udemy course here. It's only about $19. There's a link in the description below of each of our videos, so you'll see this Udemy course here. We've got affiliates with Skilling, we've got Bybit deals, we've got OKX, Shrimpy. We're working with lots of people, and don't forget to check out our Facebook, check out our Twitter. We've got a new Facebook strategy group that we're creating, so the details of that are in the description below. So let's get straight into Theta, the last altcoin of the week, and this is my favorite because the levels hold on this. The technical analysis performs really well on this chart, and you can see we've been trading in this range on Theta for 173 days so far. So ultimately, if you were buying at these levels here on Theta at $1.03, it's touched 1, 2, 3, 4, 5, 6, 7, 8, 9 times. If you were buying there and offloading, even at a conservative top, which is the top of this range here, you'd have been able to diversify, offload 30% here, 20% here, depends what your strategy is, take that out and put it back down here, and you build your portfolio. And this is what I mean by not putting your own money in, taking out profits at high levels of resistance and adding them at high levels of support. What happens is if you get the big break here, people start panicking and buying in and FOMOing in, but you're always going to get the resistance coming back here. So ultimately, if you're selling at this level or a percentage at this level in order to buy back at this level, something goes wrong, you're going to get an opportunity to buy back at this level as support rather than resistance here, which is ultimately what we want. So building your position over a period of time and an accumulation phase of 173 days for Theta, you can imagine how you could have rinsed and repeated and rinsed and repeated and rinsed and repeated. So on Theta, we've had a bit of a change in the market. We've had a breakout of this downwards trend, and it's performing nicely here on the daily. So this is why I'm interested in Theta, and the percentage to current resistance from where we are now, 24% there. The area from where we are now to top of the range, you're talking 44%. And this is where it gets interesting. Not financial advice. Once you get out of this range and you've broke out of this range, look where the previous swing lows were here. You've got these capitulation, lots of buy orders here, lots of buy orders here, which is showing interest in the market. And this is going to act as resistance going forward. And this is the level that we're going to be interested in for target 1. So once you've got the ultimate break of here, and this is acted as support, target 1, you can see how big these moves are. Target 1 from where we are now, 95%. If we move that to target 2, from where we are now, you're talking 235%. So remember, the market's here to rinse and repeat, guys. This is not going to happen because it'll take a long period of time to get to target 2. But what we're doing is we're building our position, and this is where we're interested in offloading our major positions. If you get to target 1, you want to be offloading 50, 60%, not financial advice. This is what I'm doing. And then waited to see what happens, because there's going to be another major pullback in the market. We're in a bear market. It's probably going to last another year and a half, 2 years before we get that major bull run. After the halving is going to be the area where I'm going to be interested in accumulating altcoins for the long term. But ultimately, at the moment, I'm seeing how they're performing against Bitcoin, whether they're in a major accumulation phase, how long they've been in there, whether we can rinse and repeat to accumulate these altcoins and offload at higher levels in order to accumulate Bitcoin and other things at a later date, such as dollars. So if you do like the episode, guys, anyone that's already a subscriber, if you did share that, it'd be much appreciated. Like the content, because it helps the algorithm. We want to grow this community. Once we've grown the community, you'll get more videos, you'll get more alpha, and we'll continue doing this, building the community. Remember, we're at a low level at the moment, so anyone that's building here at this level has got a higher chance of success than what there would have been at the back end of 2021. So everyone's lost their money in 2021. Let's build for the next run. Let's do it together as a community. I hope you enjoyed the episode. Enjoy your week, guys. Bye now.